This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Thank God it's a Friday. Let me begin by saying that it's a Friday morning. You're with us here on a fresh new edition of Bazaar Morning Call. We, as always coming to you from the CNBC TV18 Motilal Oswal studios. And with me are Sonia and Nigel. Guys, hi. Morning.
Hi, good morning, Prashant. Good morning, Nigel. And what a game, right, overnight. I mean, I don't think anyone expected this kind of a turnout in the India-Sri Lanka match. And first team to get into the semis now.
I'll tell you, when the team was announced and getting into this tournament, people were doubting the boys. Yeah. Just take a look at these boys. The boy you doubt he's going to play on top or, be on top form. Shami. I mean, what a spell that was yesterday. And the bowlers are winning the games as well. So
Siraj and Shami, right?
I mean, absolutely pumped up yesterday, but need to be pumped up today as well because we got one trading session and then into the weekend.
I think Sri Lanka read that 357 score as 35 or something. I mean, it was just a complete decimation in that sense.
And we did to them what they have done to others in the past, right? Yeah. Because normally they have bowled out, whether it is Canada or Zimbabwe for that 30-40 runs. We knocked them out in 50. Felt good. Absolutely.
Well, that's an optimistic note to begin the day with. So let's just quickly take a look at how things are set up as we begin another session this morning. So it's looking clearer. I mean, the fog is kind of moving away and the path is seeming to be a little more clearer. I mean, when I say the fog, I'm talking about the global fog especially. So, US markets saw a very strong follow-through post the rally after FOMC. I'm talking about the second day. The day 2, day 3 after the FOMC and sometimes can be very different. But we said this yesterday in the morning, yesterday during closing as well, that what happened during this FOMC was significant because, the Fed Chair Powell seemed very comfortable with the idea of just doing nothing. He says, well, we've done a lot. And, even if perhaps inflation surprises to the upside, he's okay waiting it out. And that's why, more and more commentary is now veering towards the fact that, well, not just this year, but maybe they're just done now in terms of interest rate hikes. But never say never. But that's the situation right now. Last night you had a very strong follow-through. So the Nasdaq was up 1.8%. The S&P was up about 1.9%. So these are strong gains. I think for the S&P, this is the strongest single-day gain in the last couple of months, actually, more than a couple of months. US bond yields continue to see a massive cool-off. So the 10-year lost another 8 basis points. We're at about 4.66. Actually, in the last, from the pre-FOMC high, from the that day pre-FOMC, we were at 4.9293 or so. So we've lost some 25 basis points on the US 10-year. That is very, very significant. Dollar index consequently is also cooled off, which is the other positive thing, which is now at closer to 105 basically. We lost almost 0.65%. Oil prices have perked up a little bit, but I mean, oil has also come off about $7-8 very quickly. But there is this geopolitical risk, which is real. It is there, and we don't know how that's going to play out. So there is a bit of that premium built into prices right now. They went up $3, but we're in a better place as compared to over the last couple of days, last few sessions or so. So I'll just put out a question once again, which I put out yesterday morning after the FOMC. Is the sort of move till the end of the year looking a little clearer, looking a little more constructive? And I'll cite 3 reasons for it. One is, if we got to believe what Powell has said in the FOMC, maybe there is more stability, relatively more stability in US rates, the bond market in the US. One, positioning is low. Earnings have not been all that bad in the US. And, consider the fact that year-end is seasonally a strong time for markets. We put this data out earlier. So you add these 3, and is it just possible that we get a bit of a clearer kind of visibility all the way into the end of the year? Okay, let's just come back to the market here. By the way, before that, later today we'll get the NFP number, jobs data. I mean, let's just hope that that's not a big blowout number. It's not expected to be. There was the auto strike, etc. But we will get the monthly US jobs data, which will be closely watched. Okay, let's come to the market here. Nifty remains in a bounce mode. I mean, we would have liked more. The market started strong, but could not build on it in any significant way. We basically ended slightly above where we started yesterday. But that's a bounce mode. 19,234 is the recent high that we got, and that remains the first level. You look at the derivatives positions in what FIIs are doing, and this is important. As of yesterday's close, FIs have got the second highest net short position in index futures now. I mean, they did not cut index future shorts. They actually added on to it. And as a result, consequently, this is the second highest net short position that FIs have in index futures. Now, that is historically proved to be a good thing because, I mean, the markets bounce from those kind of levels, and the bounces sometimes can be very large, right? No two market phases are exactly the same, but if you just see what has happened from these kind of net short levels, the market does give you a very decent bounce. But we got to take it step by step, right? The 20-day, for example, after we take out the immediate high, which is 19,230 or so, the 20-day comes in, which is 19,440. That's the second level. The immediate support, it comes in at the 40-hourly exponential moving average. Yesterday, we traded above that level all of the session. 19,117 is that level. Okay, let's just look at the Nifty Bank now, which is the weaker of the two indices, very clearly. The resistance there comes in at these two levels, 43,348, and then at 43,640, which is nothing but the 50% and the 61.8% retracement of the fall that we've seen in October. There's a 20-day also, which almost exactly coincides with that second level, which is the 61.8 at 43,640, almost exactly. The next resistance for okay, that's the 20-day. The immediate support for the Nifty Bank is the 42,590 level, which I think hopefully will get defended, and we won't have to bother about that. The small cap index has been the strongest of the lot. Clearly, it fell about 7%, but as of yesterday's close, we're already past the 61.8% retracement of the fall, of the full fall from the all-time high that we saw there. So I would say, looking at the GIFT Nifty, it'll come up on your screen. This is a constructive kind of a session that you're looking at, not just today, but actually I'd venture out and say over the next couple of weeks as well, 120 odd points higher on the GIFT Nifty. Sonia.
Oh, absolutely. And if you remember when the market hit that low of 18,850 on the 26th of October, we had made this point that every time there is a geopolitical issue, it's always prudent to buy that dip because it has worked in the past. History doesn't always repeat itself, but it does rhyme. So that's what's happened. If you look at the Nifty, right? I mean, the Nifty is now up almost 300 points from the October 26th low. So the buy on dip strategy has worked. And the US markets as well. It's been 4 days running now. The US markets have ended in the green. So very strong global cues there. Large domestic buying is what we saw yesterday. DI has bought almost 1,400 crores in the cash markets yesterday. So that was a good thing. And you've had a lot of good quality earnings come in, across the board. Overnight, of course, very strong earnings from Tata Motors. The company has raised their FY24 EBIT guidance for JLR as well. We had some good numbers from M&M Finance. The disbursal growth was strong at a 7-month high. Outside the secondary market, in the primary market, the Mamaearth IPO did quite well. The IPO was subscribed almost 7.6 times. And there are lots of earnings coming through today. There's Titan, Escorts, Kubota, Interglobe Aviation, etc. So the mood is good. The fundamentals are positive. The market has seen a rebound. And today looks like it's going to be a pretty strong day. Of course, it is the end of the week. And you do have a lot of, global cues. But I think that the bulls have sort of started to once again tighten their grip on the market.
Well, that's right. So now you buy the dip when there's a war, that's played out, right? But we're still below those levels, because on the day that this broke out, we were at 19,450 and today we're at around 19,150. So buying that dip for the longer term will definitely work. And as things stand now, things are clearing out. So hopefully, the conflict in Israel as well does subside and we move higher. For the time being, the street is taking heart from the fact that the Fed, maybe they sounded more dovish and they're not expecting any kind of rate hikes. So in yesterday's trading session as well, the Nifty, well, we saw the intraday dip, but it ended at around the 19,130 as we mentioned yesterday. Well, it hit that 19,170 and that was the resistance and the high of the day as well. Global cues are good. The Nifty Bank, that's going to be the crucial one today. It's nearing the 200 DMA. Over the weekend, you have SBI results. So the Nifty Bank is going to be very, very important. And one more data point out there. For the last 6 weeks, the Nifty Bank has ended in the negative terrain. Now, if we can hold above that 42,782, which we're currently trading above, it'll be the first winning week for the Nifty Bank after 6 trading weeks that it has ended lower. What did the FIs do? Well, they added 20,000 short contracts. That was in the ratio of 3 shorts for every 1 long position. And in percentage terms, it's at around 84% odd. Just pull up the chart out there. We started off the contract last week, the new contract that is. And from there, the FI net short positions have just moved up from around 1.5 lakh to around 1.76 lakh odd. Earlier this year, we have seen 1.8 lakh contracts, 1.85 lakh contracts, 1.95 lakh contracts as well. So we're at the upper end in terms of the net short contracts and at around 1.76 lakh contracts. If they're not going to get follow through, that's what could cause them to cover out. So I always say a net short market is not such a bad thing from a bullish perspective. Two strikes should come up for you. 19,100 put, added close on 30 lakh shares out there. The premium out there went from around 100 rupees to around 71 rupees. And there were signs of writing out there. So for the next few sessions, the bulls, they are setting up that 19,000 odd mark holds out. But on the upside, the 19,200 call as well, the premium out there moved from around 85 to around 100 rupees. And out there, we had close on 20 lakh shares that were added. On the call side, the highest amount of open interest is at this 19,200 call on. So you just plug in the numbers. We're going to be starting closer to the recent high, which is 19,233. So you'll want to get past that first up. Then you run into resistance, 19,250 to 19,300. That's the zone where we have seen the bears come into fight. So you want the Nifty to move into that level and ultimately conquer that. Support, as I said earlier, is at around 19,000. And if the Nifty needs to conquer this 19,250 mark, the Nifty Bank needs to play a role. It's only around 200 points approximately away from the 200 DMA. You wanted to get past that and then make a chart show around the 20 DMA. So for today, the Nifty Bank is going to be the crucial one. It's going to be, in all probability, crossing that, that initial resistance zone of around 42,200 at the start. It needs to build on from there. GIFT Nifty suggesting a 100-point gap up. So let's hope for a good Friday.
Okay, let's hope for a good Friday and a lot of big numbers coming through later through the course of the day. But that's Titan, there's Indigo and a whole host of others in the broader markets as well. So let's kickstart the show with some opinion coming through. On the equities front, Surendra Goyal of Citi says halfway through the earnings have been resilient and ahead of expectations. Ex of energy, EBITDA growth has been at 18%, while profit growth at 24%. Sectors with better than expected earnings include auto, cement and oil marketing companies, while IT has seen downgrades. Citi adds Reliance and iShares, replaces SBI with HDFC Bank and removes IGL and Ashok Leyland from their preferred list. They continue to prefer large caps over mid caps and they see the Nifty hitting 21,000 by June 2024.
Okay, let's get you some money market views as well. V. Lakshmanan of Federal Bank says that the Fed has held rates as widely expected, which many see as a potential peak. Meanwhile, Bank of England has also held rates at 15-year highs. US Treasury yields cooling off from a multi-year high and dollar index retreating to near 106 levels provides some respite to rupee, which is struggling near all-time lows. He expects the rupee to trade between around the 83 levels in the coming week.
Okay, and on the bonds, V. Lakshmanan says the bond market is cautious on possible OMO sales in coming sessions. Global yields cooling off will give some breathing room for domestic bonds. He expects the Indian 10-year benchmark to trade in a 7.28 to 7.36% zone in the coming sessions.
Well, we have a lot of stock-specific action track for you. We get to that in just a bit in our special Top 10 segment. Let's run you through the list. First up, Tata Motors, Gujarat Gas, Spark, Concord, JK Lakshmi Cement, Ratnamani Metals. We have IEX as well as Mahindra & Mahindra Financial. All of them will be reacting to positive news flow. While on the flip side, you have Sheela Foam and Relicare Enterprises that will be reacting to negative news flow.